Good morning. As the sun rises over the world's financial capitals, a sense of unease hangs in the air. The financial world is reeling as gold prices hit an all-time high, nearing $4,700 per ounce in early Asian trading. This dramatic surge has caught even seasoned investors off guard as the precious metal shatters previous records and sets a new benchmark for market volatility. This isn't a minor blip, it's a historic surge, signaling deep anxiety in global markets. The sudden spike has sent shockwaves through trading floors from Hong Kong to London, with traders scrambling to adjust their positions and manage risk. Investors everywhere are scrambling to understand what's driving this dramatic move. Many are poring over reports, searching for clues in economic data and political headlines, while others are simply trying to keep up with the relentless pace of change. US gold futures also spiked, showing that this isn't just a knee-jerk reaction, but a profound shift in sentiment. The futures market, often seen as a predictor of investor expectations, is now reflecting a deep-rooted uncertainty about what lies ahead. The synchronized rally across gold markets highlights a global flight to safety. From Asia to Europe and the Americas, investors are seeking refuge in gold, a traditional safe haven during times of crisis and instability. In today's hyper-connected world, a single political announcement can now send shockwaves worldwide before most people wake up. Markets react instantly, and the ripple effects are felt across continents in a matter of minutes. The record price of gold is more than a number. It's a barometer of global fear and uncertainty. Each uptick reflects the anxieties of millions, from institutional investors to everyday savers, all searching for stability in turbulent times. We're witnessing a direct response to a new and unfolding political drama. As the story develops, the world will be watching closely, knowing that every headline could move markets and shape the future of the global economy. What triggered this golden surge? The answer lies in a sudden escalation of tensions between two of the world's most powerful economies, sending shockwaves through global markets and rattling investors everywhere. Over the weekend, former President Trump reignited his trade war tactics, making headlines across the globe and sparking immediate reactions from financial analysts and political leaders alike. He announced a sweeping set of new tariffs on 8 European nations, starting at 10% in February, a move that caught many by surprise and signaled a return to hardline economic brinkmanship. These tariffs are set to escalate sharply, reaching 25% by June, raising the stakes for transatlantic trade and threatening to disrupt established supply chains. This targeted move is a direct response to European opposition to Trump's foreign policy ambitions, and it's already straining diplomatic ties that have been carefully built over decades.
The countries targeted, France, Germany, the UK, and several Nordic states, are America's closest allies, making this not just an economic dispute, but a challenge to the very foundation of the Western alliance.
This isn't broad economic policy. It's a political weapon aimed at silencing critics and forcing European leaders to reconsider their stance on U.S. foreign policy, especially on issues like defense spending and international cooperation. Europe's response was swift and fierce, condemning the tariffs as economic aggression and vowing to defend their industries and workers from what they see as unfair American pressure.
The stage is set for a tense diplomatic standoff, with both sides digging in and preparing for a prolonged confrontation that could reshape the global economic landscape. The threat of a bitter US-Europe dispute sent investors running for cover, triggering a wave of uncertainty and volatility across international markets.
The uncertainty from this tariff tremor is rippling through the financial world as traders and analysts scramble to assess the potential fallout and adjust their strategies. In times of crisis, investors often seek safe havens, and right now, gold is shining brighter than ever as a symbol of stability amid chaos. The world's two largest economic blocs are on a collision course, and the outcome could have far-reaching consequences for global trade, investment, and political alliances. As the situation unfolds, investors are bracing for impact, watching every development, and preparing for a period of heightened risk and uncertainty. How did Greenland become the center of this drama? President Trump revived his controversial plan to acquire Greenland, an idea fiercely rejected by Denmark and its allies. The 8 European countries facing tariffs are those most vocal in supporting Denmark's refusal.
For Trump, Greenland is a strategic prize, rich in resources and geopolitically vital. But this transactional approach ignores the sovereignty and will of Greenland's people. The aggressive use of tariffs against allies has created deep instability in international relations.
This unpredictability is what's spooking investors and driving them to gold. Why do investors flock to gold in times of crisis? What is it about this precious metal that makes it such a powerful magnet for capital when uncertainty strikes? Throughout history, gold has been a symbol of security and stability, especially when the world feels unpredictable.
Gold's appeal is truly timeless. It's a tangible asset, trusted for thousands of years as a store of value. From ancient civilizations to modern economies, people have turned to gold in times of turmoil, knowing it can be held, touched, and stored, unlike digital assets or paper promises. Its physical presence gives investors a sense of reassurance that few other assets can match. Unlike stocks or currencies, gold isn't tied to any government or company. It's a global asset, recognized and valued everywhere, regardless of borders or politics. This independence means gold can weather political upheaval, financial crises, and even wars, maintaining its worth when other assets falter. It's a hedge against inflation and currency devaluation, holding its value when money loses purchasing power. When central banks print more money or economies face runaway inflation, gold often stands firm, preserving wealth as paper currencies weaken. Gold often rises when markets fall, as investors seek safety. When stocks tumble and panic sets in, gold's reputation as a safe haven draws in those looking to protect their assets from volatility and loss. That's exactly what's happening now. Fear of a trade war is pushing capital out of stocks and into gold. Investors are reacting to headlines and uncertainty, moving their money into gold as a defensive move, hoping to shield themselves from the fallout of global tensions.
Interest rates matter too. The decisions made by central banks, especially the Federal Reserve, have a direct impact on gold's appeal. When rates fall, gold becomes more attractive since it doesn't pay interest. Lower interest rates mean the opportunity cost of holding gold drops, making it a more compelling choice for investors who want to avoid the risks of stocks or bonds. With the US economy cooling, many expect the Federal Reserve to cut rates, boosting gold's appeal. Rate cuts often signal economic trouble ahead, and that's when gold's safe haven status shines brightest.
Gold's inverse relationship with risky assets makes it the ultimate safe haven. When fear takes over and riskier investments lose their shine, gold's stability becomes even more attractive to investors seeking shelter.
In uncertain times, gold's reliability shines brightest. It's not just about potential gains, it's about preserving what you have when everything else feels uncertain. Investors are seeking protection, not profit. Their priority is to safeguard their wealth, even if it means missing out on higher returns elsewhere. That's why gold is surging. In a world full of uncertainty, gold's enduring value and reputation as a safe haven continue to draw investors, making it a cornerstone of financial security. Global markets reacted instantly to Trump's announcement.
Asian trading opened with a wave of risk aversion.
Stock futures in Europe and the US tumbled as investors braced for turmoil.
The threat of a trade war sent money fleeing from equities into safe havens.
Gold led the charge, with demand surging worldwide.
Business leaders and economists warned that new trade barriers would stifle growth and investment.
The memory of past trade disputes loomed large, amplifying investor anxiety.
This rush into gold is a textbook example of how politics can instantly reshape global markets. The safe haven rush wasn't limited to gold.
Silver soared 4% to a record $94.03 per ounce, reflecting widespread market anxiety. Silver's dual role as a monetary and industrial metal fueled its dramatic climb. Platinum also surged over 1%, reaching $2,358.69 per ounce.
Investors are diversifying across precious metals to shield themselves from uncertainty. The synchronized rally in gold, silver, and platinum signals a deep shift in sentiment. When fear takes hold, tangible assets become the ultimate refuge. While gold soared on fear, copper rose for different reasons.
Copper, the industrial metal, climbed 0.6% as China's GDP hit its 5% growth target.
Strong Chinese exports boosted hopes for continued demand.
Investors bet on more stimulus from Beijing to support domestic growth.
Long-term trends, AI, electric vehicles, and green energy are fueling copper's appeal.
Copper's rise is a bet on growth, not fear. Even as gold signals anxiety, copper tells a story of cautious optimism. Today's events show how economics, politics, and psychology are intertwined.
Gold is rising on fear of trade wars and instability.
Copper is rising on hope of growth and innovation.
Investors must navigate these conflicting signals daily.
The world is rarely all good or all bad. It's a mix of both.
The threat of a trade war is a major negative, but China's resilience is a positive.
Headlines drive markets, influencing everything from pensions to gold prices.
Staying informed is crucial for anyone with money in the markets. The ripple effects of global events shape our financial future. The record gold price is more than a statistic. It's the result of political ambitions, tariff threats, and global fear. The market is pulled between fear-driven demand for precious metals and hope-fueled bets on growth. Investors must balance today's risks with tomorrow's opportunities. Understanding this dynamic is key to making smart financial decisions. A single headline can change the investment climate overnight. In a connected world, your money is part of a global web. Staying informed is one of the best investments you can make.